Are you talking about the homework?
Yes, sir.
Good. If it took you a while, that's what was supposed to happen.
Yes,
If
sir.
it didn't take you a while, you're not serious.
Yes, sir. This big deep
For
4
sure.
days, 4
Good.
days for the last one. Oh,
okay.
last one?
Great.
Yes.
Fantastic.
This one is easy.
Thank you very much. It was intended to do that. Okay.
To me, the hardest one was 117.
Right.
I emailed it to you, or you want the hard copy?
Yeah, hard copy. For those, you can send an email, I believe. Those of you who are in New Providence, you can submit the homework the following Monday. You don't have to email it. Only those who are online. You found it? Okay. Good. That's exactly how a student tool is supposed to look. Messed up. Any folders that are neat? Any textbooks that look new? Something is not right. For sure. Okay. First things first. Those of you who are online, have you sent me your homework yet electronically?
I'll send mine now. This is Vinny.
Okay, Vinique. Vinique, are you the only one online so far?
No,
I haven't sent mine yet.
Sounds a little low, such as me. Catch anything.
Saranique and Ivania is online with me as well.
Okay, so do you guys who are online, send me your homework by email, please.
Okay.
If you take a picture of it and send it, sometimes it comes out so dark that I can hardly make it out. So if you can somehow scan it, email it, or some such thing, that's usually better.
Okay.
Okay, great. Questions from the homework? Did anybody get stuck anywhere?
The last one, the one on page
Last one?
117, that kicked my hip.
To me, 117 was rough.
The adjusted trade, the adjusted balance, that
To me, it was
was a lot.
What page was that?
117.
13, 114, and 117.
Page 78? Okay.
78 wasn't too bad, but it's showing off balance.
So which page was the one that's difficult? One, that's what I mean, 117, not page 78.
No, 117.
No, 117.
Let's have a look at that for a moment.
Manual and balance.
I thought somebody said page 78 was the problem.
I mean, balance and at first, but it took me a day to really get the balance, honestly.
Yeah,
It
that's
took me a
good.
while to get.
That's good. Sometimes in the real world, it takes people days, and sometimes they still don't balance. And then some people try to get smart and cook the books and move numbers around and make it balance.
Right. Go ahead. Let me try.
Try the good old fashioned honest
Try
way.
it. Right. Honestly.
Yeah, there was. It's just that sometimes students have difficulty making the connection.
The most hardest thing.
I know it seems like there's no example in this book for this.
No, that's what I did.
No. And still didn't work? So what was the question for that question? What were you asked to do? Let's take a few moments and ponder on that for a moment. Let's see if we could unravel that a little bit. What was the question?
It said the open key accounts for the accounts in the trial balance, plus the following, I think it was the additional stuff we had to add in.
Okay, so the first part of the question was open T accounts.
Yes.
Okay, was that a problem?
No.
No.
That was
No, open T accounts. So you T accounts. And you took the name that's in the trial balance. And you put the amount that's in the trial balance, and if it's a debit, you put it on the debit side, which is which side? Left side, and if it's a credit, you put it on the credit side, which is the
right. So
right side. Okay. Believe it or not, 2 weeks ago, you were totally oblivious to that and how that works. See how this thing works? It grows on you, but don't try to do it like overnight. Because it's really not an overnight affair. Okay, for example, when I do work for clients sometimes, because the end result looks so simple, like I give them financial statement, they look at it like this. Any fool good? Do it, yeah. Except they don't realize what lies beneath. The amount of things you have to know to come up with the final results. Because all they're looking at is some numbers on a paper. Oh, it balances. I don't need an accountant, I can do this by. So. Okay. I had a client once who was can you send me your working papers? I said, why, you want to audit me? The one you hired to organize you? No answer, they don't like that. By telling the doctor, give me the scalpel, I'll do it. It's all. Why a lot of businesses are in trouble every day, because they think they know it, especially small businesses, people. They say they're saving money. They don't need to pay an accountant. They can add and subtract themselves. They know how much money they have in the bank, because they think that's all there is to running a business. Not only that, I keep telling them, even if you know what a debit and credit is, one of the other important things about having an accountant is to keep some level of independence. Who knows what I mean from your reading? Why is it important to have some degree of independence?
Mix up.
Yeah, if you're doing it yourself, you can be tempted to do what? Play around with numbers. But if somebody outside is doing it, it's harder for you to suggest that they play around with. That's what independence is. That's why it's better to have somebody outside do your books rather than your family member, because you can negotiate with them or even instruct them. Shut up and do, see, like that. But if the person is outside, it's not that simple. Okay? That's what independence is all about. That's why if a guy is a doctor and his wife is a doctor, and one of them gets sick, they don't have the other one look after them because they lack the independence to do it, too emotional, correct? Let me operate on my wife. They wouldn't let you do it. Or husband, they won't let you do it. There's too many potential areas for problems.
Mr. Goldman, I was just thinking, what difference does it make really if they have a non-independent person doing this? I think a couple of weeks back, you said there was no mandatory requirement to submit or have an audit done.
Not for the typical small and medium-sized business, no. And many of them have in-house bookkeepers and accountants, depending on the size and nature. That's fine. But again, even if you have in-house accounting department, and you don't subject it to some independent perspective at some point, so the people inside are going to start thinking we're doing what to you. Anyone knows? You have an accounting department, but you have nobody checking them. What's going to happen eventually? Like what? Like what? Excuse me? Oh, that thing. You mean that thing that is as old as Methuselah? Yes. Okay. It's not mandatory. And if you don't have people who are working in your accounts department, for example, being checked, you do it at your own risk. You don't have to do it. You can have all your family members do it. No problem. But just know that there's potential for stuff. For sure. All right, so we do our T accounts. What's the second part of the question?
Determine the adjustment includes a post slid directly to the T account.
Okay, so how many T accounts did you guys have altogether?
A lot.
Somebody says 20. Somebody agrees, almost.
Back when.
20. Okay,
When.
so now we go to the adjusting entries. What's the first adjusting entry?
What's the ending inventory of office supplies?
Now, let me just say this, folks. The adjusting entries that you had in your homework are all related to adjusting entries we discussed, even though it may not seem that way. You just have to think out each one because they didn't give it to you directly the same in each case. You just have to think about it, which is where what we call the analytical side of accounting comes in. See, Anna? See, it isn't just looking at the transaction and spilling something out. It doesn't work that way all the time. After you get used to it, you've done it for a long time, you start spilling things out. But typically, you have to be thinking analytically until things settle down. And then when you run into new and different types of transactions, even experienced accountants sometimes have to stop and think about it. Sometimes even consult a colleague. Come on, what do you think about this transaction? Should we debit this and credit that, or should we debit this and credit that? So what's the first adjusting entry?
Office supplies.
What about it? See, now every word in accounting expression is very important. If you read a piece of it, you're gonna get stuck. So let's read the whole thing. What is it? Okay, now here's the analysis that we did in class, even though it may not have seemed at 12 o'clock at night when you're doing homework. The ending inventory was how much? Ending means what? What's left?
Balance, what's left?
What was the balance in supplies and inventory at the beginning from the trial balance?
$991.
And anyone? And if you have 86 left,
905.
905?
Yes,
So this 905 represents what?
I put that on the credit side.
You put on the credit side?
Yes,
Put it on the credit side.
Well, ending inventory means you haven't used it yet.
Right.
So if this is what you haven't used, this is what? What you have used. So if you go back in your example in the text, for the journal entry for supplies that you use, we have a very special name for it. It's called, sorry? Supplies expense. But to say it without saying debit or credit is useless in accounting. So let's say it. Now, they didn't ask you to do journal entries, right? They said post directly to the T account.
Eco.
And some students, especially when they're first starting out, even though they're not asked to do journal entries, some people work better if they do a journal entry first, even though you're not asked to do it. Because the journal entry helps them to see what they need to see and how to post. Other students, they just post. It all depends on the student. So, in your example, what was the adjusting entries for supplies expense? What did we debit and what did we credit? In your example. Remember in the yellow box? Those things just go all the way back. Remember accounting, bills. Don't ever forget what you've done before. No, well, not the yellow box, but go to the supplies example, supplies expense, the adjustments for supplies expense. What journal entry did we make? Oh, so we debited the expense and credited the asset. So what is the asset here?
The office supplies.
No,
Would be the office supplies.
no, question one didn't
No.
say anything about office supplies.
What is it? The
Inventory is
ending
the asset.
inventory. Yeah.
I mean, if, that's funny.
Ending
You know what inventory is, class?
Yes, sir.
What?
Inventory is what you will put in your business.
Inventory is what you buy to resell.
Right.
Mr. Wilkinson, hello.
Very important distinction. Right? When you buy a van to deliver, do you sell it?
No.
No. So inventory is a very distinct
Supply
definition.
wouldn't be the inventory, the supplies, what you buy would be the inventory, what you use to buy, take them over there.
No,
No?
but I'm glad you're saying it because remember I told you, somebody looks at it and said, any fool good? Do it, but it's not that simple. Because supplies and inventory are not the same either in accounting. Inventory has a specific meaning. It is those assets that you buy to resell. So in this example, we're looking at the asset called inventory. Okay. So if we use up $905 worth of inventory, like we sold it, we now have to make an entry to show that we did. So what do you think we do? What did you guys do?
I debit
What did you do? What did you do?
debit the office supplies expense and credit office supplies.
So you debited office supplies expense for how much?
$905.
$905. Okay, so you were able to work that out. And what did you credit?
Office supplies,
Office supplies, which is the asset. For how much?
$905.
$905. Now, why did you debit office supplies? Expense.
Because,
Why did you use the word office supplies?
well, because it said ending inventory of office supplies.
Aha, now we're getting into another story. If we say ending inventory, that's not the same as ending inventory of office supplies. Does everybody see that? Man, it's amazing how that a seemingly simple thing has all kind of little bits and pieces tied up in it. Okay, remember, if we say ending inventory, we're talking about the asset called inventory. If we say ending inventory of office supplies, then we're talking about the asset office supplies, which is a different asset. Okay.
Oh, question.
Yes,
Like I said, from what I look at, I did all of that, right?
you did this.
Yes, sir.
Okay.
But not in the terms how you do it.
How did you do it?
I just know that it was the office supply expense and the office supply, like I said, I put it in the accounts. Because I see office supply was empty and did not have nothing in the question. So I figured that's what that was supposed to be. But then I asked him to say, we would have to explain all of this in the exam.
No,
Once you do it and you see it, that's good.
no, you don't have to explain it. But the reason why I explain it is so that you don't have to guess.
Okay.
I know, you just kind of saw empty box filled in there,
Right,
but you won't be,
I put it
in the
in.
real world, you won't be allowed to do that.
Okay.
You have to know that you debit office supplies expense because you use up $905 worth of supplies. Does everybody see that? And that you credit office supplies because now the office supplies account is reduced by $905. For example, let's put two accounts here, office supplies and office supplies expense. What was the balance in office supplies before the adjusting entry? $991, debit or credit?
Never.
991. What, was anything in here before the adjustment?
No,
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 no. Now, we make this adjustment. Debit office supplies expense, 905. Here?
That's all.
Okay.
yes,
And then we credit office supplies asset to show that 905 has been used up. And what is the balance in the office supplies account? $86.
$86.
Hence the reason why we do adjusting entries in accounting at all, because if you don't adjust, those account balances will never be correct. Does anybody see that? Just like your bank book. If you start off with $3,000 and you don't make all the proper adjusting entries, you're gonna think you have money in your account that you don't have, true? Same here. If you don't make this adjusting entry, you're gonna think that you have more in your office supplies asset account than you actually have. Because you no longer have 991, you only have what left? $86. Not only does that tell you the correct balance of the office supplies account, but it also should be what? Tell you that it's now time to order more. Oh, there you go. More office supply inventory. There you. Like, for example, my wife and I went into one of the Wendy's branches this morning. So give me a bottle of water. And she said, no water. What's wrong with that? There you go. Who runs out of water? Like when you're down to the last, whatever it is of water, what do? Place in water, simple. Should you be just happy to tell customer, no water? And they were happy. And if you don't like it, get the hell out. How about that? But that's another problem. That eventually becomes an accounting problem when people stop going and you start losing those sales, see? But initially it's a customer service not taking inventory and all kinds of other problems connected. See my point? So sometimes when you see businesses close, there are a lot of reasons why. You'll be surprised what some of those reasons are. All right, so that's your first adjusting entry. What's the second one? Okay, prepaid rent. What was the balance in the prepaid rent before? From the trial balance? Prepaid rent was 1,400. And how much expired?
700.
700,
700. What's the journal entry?
1,400 debit and 700 credit.
What's wrong with that journal entry?
it doesn't have an offset,
Well,
So
the journal
700
debits and credits have to always be
balance.
number. If you have two different numbers, you know you're doing something wrong. So how much expired?
700.
700,
What word in accounting by now says expired, used up? Not depreciation, well, that's true. But other than depreciation, other favorite word?
expense,
Remember, expenses in accounting, remember I said, represents the cost of doing business. So if you have rent that you pay, that rent is for your what? Store? perhaps? And renting your store, is that a cost of doing business?
yes,
Yes, because without the rental, you wouldn't have a space to sell your goods and services.
mhm,
So the rent is part of your cost of doing business, and any cost of doing business is called an expense, just like your light bill. That's the cost of doing business. If you don't pay that, what happens? Air condition too. Who's fine too? So who's coming in there for you to generate any sales? Okay, so let's do the journal entry for the expired amount, the amount of rent that we used, that 1 month of rent has been used. What's the journal entry?
1,400,
What do we credit? Okay, somebody started on the credit side. Okay, credit prepaid rent, nothing wrong with that. Some people just hate
$700.
starting on the credit side and some hate starting on the debit side. How much?
$700, debit of 1,400,
Rent expense, 700. Now we could post. The rent expense, we don't have one, so we do what? Create one. Debit or credit? Debit. See,
Debit.
you guys gonna soon be more professional and give yourself credit for. You just have to keep working. Remember I told you? Just like Jordan and Kobe. Why were they great? And my boy with the red hair, what's his name? Not Rodman from the little school. The new school guy.
Randy, how-
Yes,
Stephen Curry?
Steph, yeah, Curry.
Is that black?
No, Randy, how-
It says not really black.
He just light skin.
Yeah, I guess it's children of Dusty Brown too. But they inherited from. Yeah. But I remember when Steph Curry's father,
Rent expense. or something.
okay, Del Curry,
Yeah, Curry.
okay? So maybe I'll give my age away a little bit. Come on, man. But yeah, why are they such great shooters?
I don't know.
Rodman is a poor shooter,
Yeah, he won.
but he is a great defender. Okay? Great defender, terrible, stop anything that moves. That's why the Bulls, they thought it was only Jordan, but it wasn't only Jordan. It was Rodman and Pippen plus Jordan.
Plus Jordan.
Didn't have those guys around him, he would have gotten beat up just like he did before he started winning championships. People keep forgetting, he played years before he won, until they got the right mix. Yet they want to give him all that. As if the other people were ghosts.
It's not like you watched the last time. Right, you watched it, right?
I didn't even have to. I probably watched it back in the day when it was actually happening. See my point? Absolutely. All right, so we debit rent expense for 700, and what do we credit?
Prepaid.
See that? 700. What's the balance in prepaid rent? That's it. So you have another month of rent left before you're down to zero and have to find more money, correct? That's it.
I have, the rent expense had something in it though.
The rent expense had something in it?
$7,700.
Oh, it had a balance.
Yeah, not a balance.
7,700. So after this adjustment, what was the balance in rent expense?
8,400.
8,400. Okay. Remember, the ledger accounts are just there, what? To maintain balances so you could know what's the correct balances. If you don't have ledger accounts, you wouldn't know anything about what's going on in your business. Who's gonna remember? No one. You have to go back to file, try, add, subtract, add, subtract. That's a nightmare. It's very inefficient and soon will lead
Now
to
you
confusion.
do accounting 101, the foundation.
All right,
Notice
So-
what I love to do it, so,
2 journal entries down. What other
corporate-
journal entry posed the problem? I don't
That's
wanna,
the-
I don't wanna talk
the
about the
course we're doing now,
one-
and
not a problem.
at this point, you're ready to just give up.
What's the problem?
It's only like the third, no, for the fourth week in,
Oh?
Mm-mm.
That's my first-
the same for me. And it's worse when you don't have no one to
Why
help you.
students have issues with journal entries? That's another, that's interesting. Okay, what's the third journal entry?
Taraniki, your mic on.
Depreciation of office.
That should be easy. What's the journal entry? No, depreciation expense for the period was how much? Was how much? 600. So what's the journal entry for the depreciation amount?
It's, normally, credit accumulated.
Credit,
Depreciation of equipment, $600.
yes.
Debit,
Depreciation expense for?
$600.
You guys seem to know. Why are you saying you had a problem when you seem to know? Okay, which one was that? What do we call these transactions again?
The interest.
in accounting? Yes, remember, the more you say it, the more comfortable you become with it. Very important. A lot of times when we're learning stuff, we don't like to say what they are. Like, we don't like to say debit this and credit that, debit this and that, these are, no, trial balance. We don't want to say it. Okay, what's the next one? Nancy? The tricky one,
Interest accrued on no payable.
interest accrued. What is the meaning of accrued? I know you thought you believe you didn't say, it, but you did.
That's the ongoing expense.
What does accrued mean? When you have accrued interest, accrued anything, what does that in it? What does that mean in general and in accounting? Accrued means you build it up, but you haven't paid it yet. So it's due, but not yet paid.
Paid.
So for example, when you open up a CD for a year, every month interest accrues monthly until the end of the year. So at the end of the year, the bank or credit union owes you an accrued interest of X, which is the total. So an accrued amount of anything is amount that is due but not yet paid. So what's the accrued amount here in interest?
$600.
Okay, so it's not paid. Do you have an example of an accrued anything in your text, in that chapter?
That's what I use.
Wages. What was the journal entry for accrued wage? See, because they didn't say wages, that doesn't mean the example doesn't apply. Anything, any accrual, that is wages, interest, or anything, accrued chickens even, the same principle applies. What was the journal entry for accrued wages? What did we debit and what did we credit?
We debit the wage expense
We debit wages expense
and credit the wages payable.
and we credit wages payable. So if you have accrued interest, what do?
Debit
Let's change the
interest
name.
expense,
Debit interest expense and credit.
and credit interest payable.
But it's okay if you got stuck, because you're supposed to get stuck in the beginning. Absolutely. Imagine if everything just kicked in out, just like. Yeah. Aha. Notice what she said until she what? Went back. And man, I don't know about you guys, but when I was doing accounting, I hated to go back sometimes, especially if it's 3 o'clock in the morning. Work at 6. You don't want to go back to anything. Okay, so yes. Remember, if it's an accrual, it doesn't matter what it is that's being accrued. The principle of debit and credit for the accrual is the same. We debit an expense account, we credit a payable account. What does payable mean? You haven't, absolutely. See, and if you start breaking things down like that, it makes it easier for you to analyze transactions. A payable, no matter what it is. If I say Red Rover payable, doesn't matter if I say Red Rover, it's still a payable, meaning it has to be paid. It's due. All right, next journal entry.
Salaries occurred at the end of the period, 200.
Salaries accrued?
Accrued, yes.
We just did that. Well, hopefully everybody got that one.
Okay.
So we debit,
Salaries expense,
yes, and credit,
salaries payable,
payable. For how much? There you go.
$200.
In this case, you didn't have to work it out, correct? In the text, they said, oh, she worked for 3 days and calculated. Remember that one? So sometimes you may be asked to calculate it, which is not hard. It's just like doing payroll. If somebody works 3 days, you find the hourly rate times 3 days. And then other times you're just given the actual amount, like in this case, $200. All right. Are we done with general adjusting entries?
No,
They don't quit. What's the next one?
service revenue still unearned at the end of the year.
Service revenue unearned. Oh, We did an example of unearned revenue, didn't we? So what's the journal entry? It's unearned.
Be under service revenue.
Well, they said service revenue unearned.
I did, I established unearned service revenue, 2150, service revenue.
How much?
She said she debited unearned service revenue.
For
Who
what
agrees
figure?
with that?
No,
What,
Service revenue should be
that's a credit.
debited.
Those credit. I credit. I got that wrong.
well, what is unearned service revenue? Unearned means you haven't provided the service yet. Okay? Did you get paid? How much?
14.
14.
Now, watch this class. What in that information told you or suggested that you were paid?
Period.
Well,
That's from the services. I mean, you didn't get paid, but it was unearned. You don't.
yeah, in other words, in accounting, when the minute you hear unearned, it means what? You have been paid, but you have not yet provided the service. So, once we come up with that determination, now what is your journal entry? Debit cash for and credit unearned service revenue. Is that an asset? Unearned service revenue. No. What is an asset? Anything that you own. Do you own unearned service revenue? No. What does your textbook say unearned revenue is? A liability. Why do you say that, Common? Because you owe the service, yes. Okay, what is the correct entry again, class? Debit cash, credit, unearned service revenue, which is a liability. Where in the financial statements would that liability go? The balance sheet, yes. Absolutely. Where in the financial statements would the cash go? Cash? The cash is always an asset. An asset always go where? At the balance sheet. Liabilities always go where? Capital equity always goes where? Revenue goes where? Expenses? Net loss. Income statement. See, remember, once you get it down pat. Okay? Mothers will tell you guys, because I don't know anything about delivering babies. When she's having her first baby, it's an unknown. No matter what anybody in the world tells her, child, don't worry about it. You'll be fine. Just break somebody's neck, whatever. Doesn't matter. And it's for the first time, it's always going to be what it's going to be. But when she's having that second baby, she knows now. It's the same thing. It's like that. Okay. So don't worry about it. Are we done with adjusting entries?
No.
Finally, one more. What is that one?
Service revenue earned but not billed.
Earned but not billed. Okay, not billed means that you have to make a very special journal entry for that not billed. The textbook told you specifically what to do. What's your journal entry? Earned but not billed, which means that if it's not billed, you have to show it as billed.
Account
Yeah, an account what? Yes,
receivable.
debit or credit. Debit accounts receivable for how much? And credit? Service revenue for 600. Yes, I was hoping somebody to have a question. Absolutely.
With the adjustments, right, they supposed to have their own T account? Or can I? Because what I think I did, I can't remember, because of my homework, I added the adjustments in the T accounts I made. That was in the trial lab. I don't really understand my question.
Well, let me ask you a question before I go any further. Did you do the T accounts from the trial balance, like I said?
Yes. I did
Okay.
that.
And you put in the balances?
Yes.
Good. If you did that, then for each adjustment, you should then either debit or credit one of these accounts, and if it's not there, create a new one.
Because I don't remember getting. I don't remember having 20 accounts, so that's why.
That's okay. You may have blah, 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 something along the way, but
Sorry, in question number one, it told us for all T accounts to open them. They said to open all the T accounts in the trial balance and then the additional, the following T account. So all these,
oh, what were the additional accounts?
it was interest payable, salaries payable, office supplies expense.
Oh, that actually helped you.
Yeah, so all of them, we had to, they
That's how,
they gave us
that's
the
why I was saying I would.
Yeah, they actually gave it to you this time.
Yeah, they gave it to us.
Yeah, so if you did all of that, then you should be okay. All you need to do is post. Yes. Now, in the real world, you're not always like given it, or even in some examinations, you're not given it. If it's not there, what do? Open one, absolutely. And we do that in accounting in the real world all the time. Yeah, if you have a transaction that's not in your general ledger, you add a new account.
I see where I went wrong. I was supposed to add the adjustments. No, never mind.
When you say add the adjustments, you mean to,
She didn't do the T accounts for the office supplies, the expense, the depreciation expense, all of that.
so how did you post them?
I added the adjustments into the trial balance, the T account.
But the trial balance didn't have an interest expense account.
Oh, hold on. But I can't remember exactly what I did.
But something a little jumbled right in there. That's fine, as long as you understand now that if and when you're doing adjusting entries, if you do not have an account in your trial balance, you create a new one. That's what we do in practice. Okay, and put in the information by all means. Okay. All right, that was a good exercise. And so once you've done that, was the homework over?
No,
Oh, the adjusted trial balance.
Okay.
Okay, now, once you've done the adjustments, the adjusted trial balance will just be what? The balances in the ledger account that you bring down after putting in the adjusting entries. So for example, the trial balance, the adjusted trial balance for prepaid rent, would it be 14 or 7? 7. See? Simple as that. And you just do that for each account. Isn't that great? Whoever came up with this thing called accounting was a masterful.
I have a question.
Yes.
Just out of curiosity,
Mm-hmm.
what was,
Which killed the?
yeah.
Okay, let it rip.
What, I just want to know what anybody else got as their ending balance when they did the adjusted trial balance.
You mean to balance it?
Yeah,
Okay.
Like, what
did you
figure
guys
did they get?
for your trial balance, debit and credit? She's curious. 106. How much? 106, 167. Is that what you got?
no,
Miss Victoria, I got the same thing, 106, 167.
Okay.
I did
Excellent.
something wrong. I know what it is.
No.
106.
This is a comma. Yeah. Yeah, if that was a point, that'd be a problem.
Yeah.
Yeah, 106,167 seems to be the correct answer. Yeah, since most of us got it, it's correct.
Yeah, I ain't happy.
Okay. And you guys actually got it to balance without cooking the books.
So I have a question.
Yes.
So even though the entry, because I didn't do it like that, but I got the same answer,
You didn't do it like what?
the entry for, the service revenue still unearned.
What did you do for service revenue unearned?
I debited it.
I'm glad you mentioned that.
Revenue, and I credited service revenue.
What did you debit?
I debited unearned service revenue,
Unearned,
and I credited service revenue.
for how much?
50. 1450.
1450? And it's still balanced, right?
Yes, I got that same one.
Yeah, because since you debited it and credited at the same amount, it'll still balance in the trial balance, but the right amount is sitting in the wrong account.
So
In the-
even though that would have made a different balance in my cash.
There you go. Because see, you would have had a problem in your cash account. Because you would have collected money, but it would never been reflected in your cash. So your cash would be out. See my point?
But so I'm not definite, should I still have balance?
You could still balance. But that doesn't mean your accounts are accurate. So the trial balance is designed to test for accuracy, but depending on where those debits and credits lie, you could still balance and have accounts that are incorrect, like in this case, because this debit shouldn't have been to unearned. It should have been to cash. And this credit shouldn't have gone to service revenue, it should have gone to? Should have gone to unearned service revenue. The unearned service revenue is 1450, yes?
Mhm.
Yeah. So you collected cash debit. That's what that should be, the cash, and credit to unearned service revenue, the liability. Because you haven't provided that service yet. Okay. So if you put these, see, you still have a debit and credit, but these are the wrong accounts, correct? So because of that, your trial balance could very easily balance. But your account, your numbers, your accounts will be incorrect. And that could happen. Either accidentally or because persons don't know what to do and just happens, or deliberately. Folks put stuff in different accounts and egg things up on purpose. So again, it could be that they didn't know what to do because they didn't understand the principle involved, or they just did it that way on purpose for some interesting reason. Folks always have an interesting reason when they're doing stuff on purpose. Oh, got it. All right. So that gave us an opportunity to try and move some of the cobwebs with regards to adjusting entries. That is usually where students get stuck a lot. And which chapter are we doing tonight? Anybody remember? Chapter 4. Because you should have done homework on chapters 2 and 3. Remember? So tonight we're doing chapter 4, and chapter 4 has adjusting entries again. Remember I said in accounting, everything does what? Yeah, bill one thing builds on the other thing. Also, while I remember, folks, when you pass in your homework, make sure you put your name on each sheet of paper. I got some homework the first time with just homework. And I'm like, okay, who could this possibly be? So I had a dilemma. All right, so please put your name on each sheet of paper so that even if they come apart for some reason, I would know. All right, register. Let's see who's here. Vincent, are you here? Absolutely. Who knows which week we're in tonight? 7. This is living la vida loca.
No, I'm not.
Six.
We must so much.
That's why I asked. Which week are we in, students? It's up to you to keep track of your weeks. Comment like 7, 6, 3. Cool. Man, I don't know. I just come to class. She's working it out on her phone, a smartphone. Why do you say think?
Yeah, that's the fifth.
Common agrees. He said, this is the fifth.
It should have been the
Because
seventh
next week.
class, but we had two holidays.
Okay, so that's, since she's found a way to work it out, just so you were throwing stuff in a ledger without knowing why. She came up with another way.
Once the midterm, once the answer right, that's what I want. Once it's right, then Bach is right.
You don't care whether you understand it or not.
How I get it, that's Bach is right. When I see the numbers, I put it in.
Alright. That's really 5. Alright. Portanella. It's Portanella. Right in the back. It's been around, for some reason today seemed longer than usual, correct? I don't know why. Shay. Shay is probably off partying somewhere. Okay, Vanique.
Hi.
Yes, Vanique is there. I'm not partying, says I'm here. Common is here. Wait a minute, isn't that a rapper named Common?
Common.
Isn't there a rapper named Common? Stop it.
Name Cameron.
Oh, your name is Cameron?
Oh, Cameron.
I don't know why I keep calling him Common. Oh, that's what that Cameron. No wonder he kept looking like, who the hell is he talking to? He had his hat sort of the back end and then so I call him Common. But yeah, there's a very famous rapper called Common. But his name is not Common, his name is Cameron. It's just like he spells his name in an unusual way, not the English Cameron. Yeah, he spells his name CAMRYN, very different.
Oh,
Cameron. Yeah. No wonder I was bloody calling him Common, because these classes don't work 100%. So it's Cameron into Common. That's the problem. Okay, Taisha. Right there, Taisha. Way to go. Victoria.
Here,
Okay, Victoria. Online again. Yes.
Wow, what was the exam, like, how would it work with us sitting here and them on?
Well, they are going to be invigilated by someone who will be sitting in here with you. And they will have to turn on their cameras from the beginning to the end. So technically, they should be stopped. And morally, they should be stopped. What do I mean by morally?
Morally, they know what they doing, so they shouldn't cheat.
That's what I mean by morally.
Yeah, but people still cheat because of moral. So because of that, can I take mine online? Because of moral.
Now, remember, the problem is they're not in New Providence.
Yeah.
That's, yeah, I know, but that's the best that we have at the moment. Not only not locally, but internationally as well, when you're writing examinations like this. Okay? Persons are writing examinations virtually in the UK and all over the world, and they have proctors and people sitting in, and certainly you cannot control everything, but we try to set it up where it makes it very difficult for those persons who might give it a shot. Okay. These people even, okay. Victoria, it's not here.
Victoria's here.
Sorry, Victoria. I was just about to say, sorry, Victoria, yes, we here. Crystal. Yes, Crystal. So Crystal, some of those bloody adjustment cobwebs have been cleared a little bit. Okay, that's okay, because you'll see them again tonight. which should further assist you or anybody else, and it takes a little while. Teranique,
I'm here.
okay, great. Evania,
I'm here.
okay, there you are. Veronique. It's Veronique.
I'm here, Mr. Wilkinson.
Veronique, you there?
Yes.
No one, you didn't answer, that wasn't your name. Not answering, so no, until he says felony, I'm not answering. Okay. Bunch of Neeks in this class. Shavonique? Shanique. Shanique? Oh, Shanique. Okay, we have a lot of Neeks in our class. Okay. And then last but not least, Shadell. Where's Shadell? Must be cruising around somewhere. All right, let's get into chapter, what is it again? Sorry,
Four.
chapter
Four.
4. Now, I hope everybody has read chapter 4. Certainly we had sufficient. What am I gonna say next? Sufficient?
Time.
Sign on it. Since I don't care what you say about time. I'm still tired. I didn't have enough time. All right. So chapter 4 is all about what? Yeah, completing the accounting cycle, closing the entries. Remember, up to now, we've done the what? Post-closing trial balance, remember? How we did the adjustments, then we posted the adjustments, we came up with the correct numbers for each of the accounts. Then we came up with a post-closing trial balance, which we did for homework. And so now we get into completing the accounting cycle, where we close the books, as we call it in accounting. And to close the books, we say we have to prepare some closing entries. Now, closing entries have some very unique characteristics. Okay, so I think we'll start with Cameron. Hold on, I have to remember that now. That's so used to the other name. Okay, Cameron, why don't you pick up a little reading for us on the closing entries? Maybe that might, when your colleagues hear each other, that might help as well. Closing entries.
Closing entries are journal entries made at the end of an accounting period. They have two purposes: setting the stage for the next accounting period. Since the income statement reports net income or loss for a single accounting period and shows revenue and expenses for only that period, it is necessary to clear revenue and expense accounts and the withdrawals accounts of their balances. This step enables them to start over with a zero balance in the next accounting period.
In other words, in accounting every year, the income statement accounts are brought to what? Zero. And the new year begins with zero accounts. Only the income statement. All right, very important principle. Once you get it, it's home, you're home free. Until you get it, you're miserable. Okay, keep going, Cameron.
Summarizing a period's revenue and expenses. The income summary account is a temporary account that summarizes all revenues and expenses for the period. It is used only in the closing process, and its balance equals the net income or loss. The preparation of closing entries is an important step in achieving two important concepts introduced in chapter 3. Closing entries assist in achieving both periodicity.
Yeah, that's a tricky one. Periodicity. No, don't even lose no sleep over that one. It just means the closing periods. Another hell again, periodicity. Complicating stuff. Okay.
And approve accounting by being the process by which the life of business is divided into equal time periods. Further, they summarize the effects of each accounting period of owner's equity and set the stage of the next accounting period. To accomplish the closing process, it is important to understand the concepts of permanent and temporary accounts.
Mhm.
Balance sheet accounts such as cash and accounts payable are considered permanent accounts or real accounts because they carry their end of period balance into the next accounting period.
Mhm.
In contrast, revenue and expense accounts such as revenues earned and wages expense are considered temporary accounts or nominal accounts. Temporary accounts begin each accounting period with a zero balance.
There you go. Clear as sin. All right. Remember, permanent accounts have another name. What is it called? Real accounts, and they're found in which statement? Where a real account found? The balance sheet. And where a temporary account found? Absolutely. See, once you get it, man, it's almost heavenly once you get it. Keep going.
Accumulate the balance during the period and are then cleared by means of closing entries. The net income or loss is transferred from the income summary account to the owner's capital account because revenues and expenses represent increases and decreases in owner's equity. Exhibit 1 shows the overview of the closing process.
Okay. Now, take a look, take a moment and look at exhibit 1 and see if you can figure out what they want you to figure out. In the meantime, I'm going to put this special account called income summary here. And we already told that this is only used once a year to close entries. And when the closing process is done, this account will have a zero balance till the next year.
Good night. Sorry I'm late.
Okay, the income summary account. In the room? Hello, who just got in?
A Shay Pickstock.
Oh, Ashay.
Yes, sir.
Okay, Ashay, you made it.
Sorry about that. I got off a bit late today.
I know how these jobs go. That's fine. We were just going over some adjusting entries on the homework, and now we're picking up with closing entries in chapter 4.
Okay.
Okay, so just go right into chapter 4, page, what is it? Well, yep. 130, 132, Ashay.
Okay, thank you.
You're welcome. I was telling the students online, if you haven't emailed me your homework, please email it to me, preferably. The photo shoots tend to come out dark and strange and colored and all kinds of other stuff.
Okay, so you would
All
prefer
right.
for it to be scanned to you?
Sorry?
You would prefer for it to be scanned to you instead of a photo?
Preferably
Okay.
scan
No
and
problem.
email. Yeah, that would be better.
Mr.
Okay.
Wilkinson, you got my homework? This Victoria.
You sent it?
Yes, I emailed it to you.
Victoria, okay, I'll have to go back and see if I got that. If you don't hear, get a confirmation from me by tomorrow, just drop me a note, Victoria. Or
Okay.
just resend it and say, I'm resending it just in case.
Okay, I'll do that now.
Absolutely, absolutely. I was also telling the students, please remember when you submit your homework to put your names on each sheet of paper. I got 1 or 2 of them with no name, and I had to go through like a whole visitory thing, look into a crystal ball. Okay. Did you guys figure anything out with this exhibit? What exhibit is that? Exhibit number 1. Did you figure anything out? Or just a big blue? Well, I see some step numbers like 1, 2, 3. Do you see that? Well, usually for me, if I see something with step numbers like 1, 2, 3, where do you think I would go first? Step 1. Should we go to step 3 first? Hell no. I think it goes to 3 first. We go to 1. What does step 1 say? To close the revenue account. What is the name of the revenue account? Revenue account? Does it have an amount in it or just an excess? Notice, to close the revenue account, do we debit it or credit it?
Yes.
Credit.
Debit.
And what do we credit? See that?
The expense account.
Absolutely. So for example, I can have here a revenue account. I could put in an amount. They didn't put it there because they don't want you to focus on dollars yet. I could have revenue of what? $3,000, right? For the year, for the month. And then in order to close this account, I have to debit it, correct? Like that. So the balance is now. And then I have to take this balance and transfer it. If this is a debit here, then it has to be a. See how that works? You'll see more of that. I just want you to follow the exits. So that's step one, closing the income account. See? And what do we close it to? Income summary. How about that? Step two, what's the normal balance for expenses? So to close it, you have to? And what do you close it to? Debit or credit? Debit. Okay. Man, easy peasy. So far. Step three, to close the income summary account. What do you do?
Calculate the average of the income.
So you get the balance of the
You
account.
get the balance.
Of which account?
The income.
Yeah, you calculate the balance of the income summary account, whatever that works out to be, and transfer it where? To the capital account. My. This is what we call the analytical phase of accounting. The phase that drives even some professionals who are practicing sometimes, depending on what matters they're dealing with. Don't think that because you're just starting out, you get stuck like, man, people in practice get stuck. No matter what profession, law, accounting, medicine, plumbing, architecture. Doesn't matter. Teaching. All right. Any other steps? Like step 4? There's the step 4? Okay, what does that say? To close the withdrawal account. What's the normal balance for withdrawal? Debit. So to close that, you have to credit it. And where do you transfer it? Debit or credit? Debit. So notice, in case you haven't noticed so far, even if you haven't noticed yet, you'll see soon that whenever you have net income, it goes to capital as a plus. Have you figured that out yet? Net income is the difference between revenue and expenses. So the net income, it goes to capital as a plus. Withdrawals, on the other hand, reduce capital. So withdrawals goes to the capital account as a debit or minus. Yeah. Absolutely. All right. Now, folks, I'll tell you a little secret. Yes.
Like how from the income summary, so it's no like set side with the balance supposed to be, what it's supposed to go on, it's just if you have a net income or if you have a net profit, or net loss.
If you have a net profit, you're saying, oh, you mean the income summary side?
Yes.
Yeah, that'll determine whether you have a net profit or net loss.
Profit or a net loss, determine what side your balance is on.
Absolutely.
Apply to the capital account.
Absolutely. So if you have a net profit, then it goes to the credit side of your capital account. If you have a net loss, absolutely. Very good. That's exactly what I wanted you to see in that particular example. But don't worry, you'll see it again. This is just a little makeshift thing to get you warmed up. Any other steps? No, because we closed all the important accounts. You see? So let's get into the nitty-gritty then. Steps in the closing entries. What is step number one? Close the credit balance, full stop. Okay, can anybody say why she just stopped at close the credit balance? There's a reason why she stopped, I think. It's probably because after doing the example earlier, she gets it, like, close the credit balance, I get it, let's go. You know that. Because I get it now. So she said the important part, no mind, close the credit balance, because she already knows what that means now, because of the previous discussion. That's my point. That's why it's so important to be sitting in sessions. They hear this thing and to interact and to raise questions. Because if you're not in it, then like it's hard to get it sometimes. You see, guys, close the credit, let's go to step 2. Way to go. And what is step 2? What's it? Step 2? Close the debit. She doesn't want to read anything else. But you should read everything. Okay? And you should read it as beginning students just to hear it and to hear the whole part of it. Not just, even though I know you get it now. Okay? I'm not reading the whole thing, I get it. He just wants to get out of Dodge. If it's any consolation for you guys, back in the day when I was doing accounting in night class after work, my classes were from 6 to 10 o'clock at night, 4 hours uninterrupted. Imagine that after all day of work. Yeah, it's a nightmare. Okay, and then especially when you get into the intermediate classes where the concepts are 10 times more difficult, and then you're sitting in that bloody class after all day at work, after going to bed 4 o'clock that same morning because you're doing other homework and other studies like that. So you're like a zombie. I think I was a zombie until I finished grad school. My average sleep time must have been 2 hours a day. And I always ask myself, what the hell are you doing? Broke, busted, and tired? That's a recipe to give up. Okay? Seriously. And then you don't have any parents to pay. Nobody to pay nothing. You have to go borrow. Take your salary, spend all. Then what you don't have left, you have to borrow the difference and pay it back, or else. And go through all that pain and suffering every night in class 4 hours. And in those days, because I was trying to do like, I had classes 4 nights a week, 4 hours per night. Man, I tell my children, you guys, you don't know how lucky you are. They look at me like they don't even understand what I mean, because they went straight through college, everything was paid. I was a fool. I paid for everything. I was so daddy struck, I didn't know what to do with myself. Now in hindsight, I said, do you people really? They're like, you ever get a dad? I'm like, I hope so. All right, step 3. Let's see if we can shorten that. See if she can shorten step 3. What is step 3? That's what you were asking. Closing the income summary account to capital. If the income summary is a net profit, you credit capital. If it's a net loss, you debit capital. See that? So in other words, profits increase capital, losses increase capital. And what is capital? Your investment in the company. And when you go in business, are you going to lose capital and money? No, you're going to increase capital and profits. When that doesn't happen, it's time to close. And if you don't close, something will make you close. For sure. All right, any other steps in the closing process? Yeah, close the withdrawal as we saw to capital. What does withdrawal do to capital? Increase it or decrease it? Decrease it. So if you invest money in your company, don't go taking money out to go on cruises and all that stuff just because other people are going. People do that, you know, and they didn't need a cruise until somebody else said they're going, and all of a sudden they antsy, they have to go too. So what do? Go into business, take out $3,000. That's called a withdrawal. And then the light bill and salary come up next week while they're on the cruise and can't be paid because there's no money in the bank. Because when you make a withdrawal, that's a real situation. You're taking out real money that you need to pay real bills. For sure. All right. So those are the 4 steps. We know them now. All we need to do is practice them. And so this next exhibit, what is that statement called? The adjusted trial balance. Have you seen that before? Yeah. When does an adjusted trial balance occur? After what? After the adjusting entries have been posted to the T accounts, and whatever the remaining balances are, go into the trial balance as debits and credits, which should equal if you did it correctly. Okay. Of course, some mistakes can still balance like this. Debits and credits, they still balance because the amounts are the same and correct, but the account names are wrong. Okay. But normally it should be okay, but that doesn't mean the trial balance cannot have an error. That certainly does not mean that. That's like saying somebody with a gunshot wound in surgery cannot bleed out and die. That would be unrealistic. Because oftentimes they do. So why should we expect perfection from the accountant? And we don't expect it from, well, we expect from the doctor too, but in real life, it doesn't work that way. In real life, it doesn't work that way in accounting, no other profession. All right. So having said that, the next couple of pages are really just the same steps that we're looking at by extension. Let me take you to the top of page 135. Is that a journal entry? Entry number 1. Preparing closing entries, entry number 1. Is that a journal entry? What are we debiting? What are we crediting? We debit design revenue. Is that consistent with the first step of closing entries? Yes. Yes. The total amount of revenue that we earned was how much? That's all. And if you're closing the account, the revenue was originally credited, so you have to now debit it and credit what account? Step 1. See, simple as that. Step 2. What are we closing? So which accounts are we closing in step 2? The expense accounts. Yeah, we're closing all the expense accounts, which normally have debit balances. So we now have to credit them so they can report to 0. And which account do we debit? Man, this is almost too good to be true. How easy that seems. All right, step 3. Entry 3, sorry. How much is it? What is the amount in entry 3? 3,960, what does that represent? Net income. That's the first thing I wanted to hear. The 3,960 represents net income. How do we know? Yeah, if we look, first of all, revenues over expenses by 3,960. Secondly, if you look at the income summary, you'll see the difference between the two is 3960. So that net income is now, what are we doing with that in entry 3? What do we debit? Income summary for how much? And credit? Capital. So we're closing the 3960 net income from income summary to capital, which then brings the income summary balance to what? 0. Man, absolutely. Now, folks, don't get me wrong. Has anybody in this class ever done, when I say in this class, I mean online students too. Has anybody ever done any dance classes? No? Who? Crystal? Yeah. Are they as easy as they look? Crystal? Dance classes, or do you have to work hard?
Some people are born with certain skills. Some are just naturally flexible,
Okay,
and some, then others have to work extra hard for flexible.
yeah. And added to that, some learn quicker than others.
Right.
So those, the flexible ones, unfortunately, tend to be the ones who learn fast as well. And the ones who are not so flexible sometimes tend to be the slower learners, so it becomes a nightmare. The point of making those, either way, at the end of the day, you have this final product, which looks very simple, which in fact has a lot of work behind it. All right. Any other entries? Entry number 4. What entry is that? Oh, what do we get? So this is a withdrawal transaction of the closing. How do we close a withdrawal account? Debit capital because it reduces capital, and credit withdrawal in order to close the account. So I'm thinking, and then of course we have step 1, 2, 3, and 4, which we don't have to go through anymore because we already know what's coming in step 1, 2, 3, and 4. The additional steps really is kind of to introduce you to the journal entry part of it, which you now know, and then the posting side, which you also know. But again, remember, we have a little repetition going on because one thing keeps building on the other thing that keeps building on the other thing. Okay. For example, on page 136, what is that blue box saying to us? Let's see if we can analyze it. Well, what is the topic in the blue box? Application of double entry. The minute you hear double entry, what should come into your mind? For every debit, there must be a credit. Okay. So what's in this box? Are they showing us any numbers that we are familiar with? What is the amount we're dealing with here? Oh, that thing again. What does that represent? Revenue. So if, first of all, if we look in the journal entry, what is the journal entry again? What do we debit? Yeah, revenue, the 13.6, and credit. Income summary, the same thing we saw earlier, correct? Except now they're showing you how to post it, which of course is mundane for you now because you're a professional poster sort of. You see the posting? Yeah, same thing. This looks a little fancy, doesn't it? Getting to that nice looking journal entry and journal that you'll see later, like the actual journals that we see in practice. These short versions and T accounts are just for working purposes and analysis. Later on, you see some nice clean journals that we use in practice, whether manually or electronically. All right. So step 1 and 2 and 3 and 4, we have done these, but we haven't seen the posting details. So we see the posting details for closing revenue. So we go to step 2 on page 137. Do you see the closing details for expenses? Like each expense is credited, each one. Do you see that? Okay. Well, we saw it earlier, we just didn't see it in this detail. So if each expense account is credited, what is debited for the total? For how much? And how do we get that? Add up all the expenses. Okay, so hold on then. Moving right along then. We are now. So on page 138, do you see how nice the accounts are looking? No more T account, they're still kind of T-ish, but they're looking fancy. True or false? Yeah. How many accounts do you see on page 138 at the top? What's the balance in each account? I know it's a star. Look, listen as a song actually.
Is it 0?
What's the balance in each of the accounts on page 138?
Is it 0?
0.
0.
Yeah, somebody said 0 online as well. 0. Just doesn't look like 0 right away because the accounts look so fancy. You have to go and search to see if you even recognize that it is still an account. I'm hoping that when you are in your reading time, that you actually look at the account to see what the components of the accounts are. Like it has a name called wages expense. It has an account number to the top right-hand side, which is what? For wages expense. What's the account number? Yeah, like if you work in a company, what's the account number for? Or any other account. The date, is that important? Yeah, it is. Item, what's item? Which, yeah, it shows you the type of, yeah, or transaction or entries going through. Adjusting entry, closing entry. So anybody looking at that can see what the transaction represents, auditors or anybody else. That's the beauty of accounting. Doesn't leave anything to your imagination unless you want. Accounting hates imagination. We want it written down. We leave imagination to attorneys to create stuff and philosophers and such people. But accounting does not get into imaginations. All right. Reference numbers, so we can cross-reference to see that this wage account transaction is related to the adjusting entry account number, the closing entry, and so on. So you can cross-reference everything in accounting. Then you have a separate column for debits and credits, and then you have separate balance columns. So everything is nice and neat and clean. And we do that for every single account in accounting. For sure. All right, step 3, what are we closing? Income summary account 2. What do we debit? For how much? Oh, that. And what do we credit? Capital. So we're closing the income summary account 2, the capital account. That's how we say it in accounting. We're closing the income summary account 2, the capital account. So we're transferring the net income of 3960 to the capital account. Because remember, does anybody remember what the original capital account balance was? Oh, that's too far back. Can anybody find it? The original capital balance. $40,000. That sounds correct. Unless, of course, somebody disagrees. Say, man, I don't care if it's 40 or not. 40,000. So if the company generates net income of 3960 and income summary is closed to capital, where do I put the 3960? Credit capital, isn't it? So I should put it here. So now after the closing entries, the capital account has increased or decreased? To 43,960. See how that works, folks? Really quite cool once you get it. Just sometimes getting it stinks. But once you get it, by all means. When I leave it tonight, I have to go home and sit down with some stinky accounts with somebody. Everything is a total. Still arguing with your, can I see your working papers? All right, step 4. What are we closing? The withdrawal amount. What are we closing into? Capital, debit or credit to capital. So that should go here. How much is it? 2,800. Okay, so instead of having a capital balance of 23,960, we now have a capital balance of
2,800.
41,000. How much? 41,160. Okay, I hope your math is correct. Because come exam time, you have to make sure your numbers are correct. Because you might be doing it correctly, but putting the wrong thing on your machine. Or your machine might be one of those weird machines that have a mind of their own. Or the battery is going, or something is happening, or something is happening. And even though you're doing the right thing, you come up with the wrong answer. So be careful. Okay. When you are coming up with your totals and your balances. She says, but I had the right thing. Come to find out, they added it up wrong. They subtracted it incorrectly. They didn't put the minus sign in the right spot. So it came out plus this or minus that, some weird stuff, or some total crazy number altogether. All right. So we've seen several approaches to closing entries. We absolutely have no excuse, I think, in terms of how to manage closing entries. And so once all of our closing entries are done, we can then come up with what we call on page 140 at the bottom, the post-closing trial balance. And it's exactly what we say. After all the closing entries are done, the post-closing trial balance, will it have any revenue accounts in it? Expenses? Why not? They've already been closed and been brought to 0. Why is there not a withdrawal account in the post-closing trial balance? Because we closed that too. What about the income summary account? Why don't we bring down the balance from that? Because we closed that too. See my point? So if you do all your closing entries and you still have something with a balance, and if it's not a real account or a balance sheet account, you've done something wrong. You go back and double check. At the end of the closing process, all the closing accounts should be equal to 0. All right. So I want to pick an online student. They're home with their feet up, having fun. Let's see who's online. Teranique. Off the coffee. Ivania.
Yes, sir.
Are you there?
Yes, sir.
Okay. We're taking inventory. Okay, Ivania, I want you to go to page 141.
Yes, sir.
We're not leaving you out of the fun, you guys online. Hell no. Go to page 141 at the bottom and begin reading under reversing entries. An optional first step.
A reversing entry is an optional journal entry made on the first day of an accounting period. It has the opposite effect of an adjusting entry made at the end of a previous period. That is, it debits the credits and credits the debits of an earlier adjustment entry. The sole purpose of reversing entries is to simplify routine bookkeeping procedures, and they apply only to certain adjusting entries. As used in text, reversing entries apply only to accruals.
Yeah,
Accrual-
accruals.
Accrued revenue and expenses. To see how reversing entries can be helpful, consider this adjusting entry to make accrue wages expense made in Blue Design Autos records.
Now, thank you. Stick up in for a moment. Notice reversing entries only apply for what? Accrued revenues and accrued expenses. If anything else comes up, no reversing entries required. See that? So you don't have to sweat it. You're only going to be reversing entries, and it's optional, meaning you don't have to do it, but you'll see that it tends to make the accounting for one or two types of transactions in the new period or month or year a little bit easier for certain accruals. What is an accrual again? An amount that is due but not yet paid. Absolutely. All right, so since she has said that, let's look at the journal entry for a reversing entry. What do we debit in this reversing entry? At the bottom of page 141. We debit wages expense and credit wages payable. For how much? Does that entry look familiar? If you go back to the adjusting entry before the year end, for wages, what was the journal entry for the adjusting entry? $720? And what did we debit for the adjusting entry? Wages expense, and what did we credit? For the adjusting entry. Not closing, adjusting. Wages payable. Why? Because the employee worked 3 days. We calculate 3 days pay. It comes up to $720. She's not gonna be paid until the next pay period. So the company owes her how much? $720. But the $720 occurred in July, but she's not gonna be paid until, say, August. You see that? So we have to account for the expense in July, which is the wages expenses for the last 3 days in July. Go back and read the little thing again. And then the payable is owed by the company, which will be paid in the next pay period, which we could say is the next month, August. So that's the adjusting entry. So now we see again at the bottom of page 141, what the adjusting entry looks like. So now, if we turn the page and we look at the reversing entry, what is the reversing entry? On page 142 at the top. Debit, wages payable for how much? Uh-huh. For how much? 1680. And we credit cash for how much? So what is this journal entry showing us? Well, what it is showing us by debiting wages payable is that the payroll is now being paid in the next pay period. Does everybody see that? What is the total salary bill? 3,400. 2,400. Of that, how much was payable? 720. So they only have to pay a difference of in actual payrolls? 1680. Okay, that's pretty much how it works. So the accrued entry at the end of the year was debit wages payable, expense and credit wages payable, and then the beginning of the new period, we do what? We pay it off in the next pay period. And as you can see, the payroll is debited first to show that that amount is paid, and then the remaining payroll of 16, how much? 80 is also paid in the next pay period. And the total amount of 2,400 is credited to what? Cash. Why do we credit cash? Because we're paying out. That's why, same as usual, nothing changes. Remember, accounting is very consistent. Once we get into the groove, we don't change the groove. You stay in that groove. You're not like other professions, go to bed one night and get up the next day. That's a whole different story. Okay, philosophically speaking, a night's rest can cause somebody to think differently about things. And so today, I feel different. Yesterday, I was a boy, a man. But today, accounting doesn't work that way. If you go to sleep a meal in accounting, you get up a, yeah. In accounting, you go to sleep a female, you get up a, yeah. Accounting don't mess with that nonsense, that philosophical mumbo jumbo, talking nonsense. Can't imagine. And we're supposed to be highly what? Intelligent. See, here's what I'm saying, students, outside of the context of accounting. Even if you don't believe in God's incredible creation, let's say, I don't believe it. Man, common sense. How's that? I don't believe it, but common sense should tell anybody. It does not make any sense. That's my whole point. So even the atheist should be able to say, this is stupid. Okay. Charinique, you were reading? Ivania, sorry. Ivania, are you ready?
Yes, sir.
Okay, pick it up in the middle of page 142.
If no reversing entry is made at the time of payment, the accountant would have to find out how much of the $2,400 applies to the current accounting period and how much applies to the previous period.
Stick a pen, which we just did. See that entry we did? They had to go and find out. Okay, how much apply? We're paying payroll in August. How much of this came from the previous month? Then you have to go dig like that through something to the ledger somewhere and say, 720, payable. And then we debit the payable and then we debit the rest to wages expense. Keep going. If we do not do a reversing entry. All right, keep going.
That may seem easy in our example, but think how difficult and time-consuming it would be if a company had hundreds of employees working on different schedules.
Hundreds of employees. And all of a sudden, we're not dealing with uno. We're dealing with a multiplicity of problems. Who the heck is going to dig all that up? And by the time we finish digging, there are all kinds of errors. Because we know when people start digging in stuff. All right, keep going.
A reversing entry helps solve the problem of applying revenues and expenses to the correct accounting period. For example, consider the following sequence of entries and their effects on the wages expense account.
Drop down beneath that and go into the continue reading.
Here you can see that entry 1, adjusted wages expense to accrue to $720 in July accounting period. Entry 2 closed $5,520
Go to
in
the next
wages
one, last one.
expense for July to income summary, leaving a zero balance. Entry 3, the reversing entry, set up a credit balance of $720 on August 1st in wages expense, which is the expense recognized through the adjusting entry in July, and also reduce the liability account with wages payable to a zero balance. The reversing entry always sets up an abnormal balance in the income statement account and produces a zero balance in the balance sheet account. Entry 4 recorded the $2,400 payment of wages as a debit to wages expense, automatically leaving a balance of $1,680, which represents the correct wages expense to date in August. The reversing entry simplified the process of making the payment entry on August 9th. Reversing entries apply to any accrued expense on revenues. Blue Design Studios' only accrued expense was wages expense. An adjusting entry for the company's accrued design revenue, would require the reversing entry that follows.
Okay, and what is the reversing entry? What do we debit?
Design revenue,
For how much?
400,
And what do we credit?
accounts receivable,
For
400.
400. Remember the rule of reversing entries? The only reversing entries we ever make are for accruals. Remember that? Okay, whether it's accrued revenues or accrued expenses. In this case, it's an accrued revenue. In the case of wages, it's an accrued expense. So for example, let's go back to the salary account and see if we can create a picture in our minds. What was the balance in salary expense? Anybody remembers? How much? Salary or wages? Okay, what is the balance in wages expense? Let's call it wages. Okay, 5,000. Okay. And what transaction that we came up with affected wages expense? 720, debit or credit? Debit, 720 accrued wages. Okay, and that total became?
Before the 720, the balance is off to 4,800.
4,800, not 52. Okay. 4,800 plus 720 equals? There we go, 5520. Now we know at the end of the accounting period, let's say in the month, that we had accrued wages of the 720. So we debited wages, what do we do? Debited wages expense for how much? 720 and credit wages payable for 720. All we're saying in the reversing entry process is at the very first day of the new month or year, let's say month, we just do the reverse. So the reverse of this would be what? This is the adjusting entry. This is the reversing entry. What is the reversing entry of that? Yeah, debit wages payable. 720 and credit. Wages expense, sorry, 720. Which means that what is the normal salary payment each month? 2,400. So if we have salary expense, which is normally what, 2,400, right? If we make this reversing entry immediately on the first day after the end of the month, then we post this credit of wages expense here. So everybody see that? How much? 1220. And so now the balance in salary expense is what? 1680. You don't have to work out anything. If you didn't do this reversing entry, you have to remember every single entry that was adjusted and try and work it out. So you can pass the entry that we did with the 1680. But if you do the reversing entry the first day after for the adjusting entry, then you don't have to do that. It gives you the correct salaries expense. Some people love to do it because it makes their lives a little easier. Other people, accountants, for one reason or another, they don't want to do the reversing entries. They don't like to try to remember to do it. They just, in the new pay period, try to work it out and come up with what is owing from the last period, subtracting it and coming up with what needs to be paid for the current period. Okay. But not to worry, that's your introduction to adjusting and reversing entries. Reversing entries is not a major part of accounting life. It is just something that we use sometimes, depending on the accountant, for the new period, which is the next day, in terms of making payment for salaries or any other accruals. Now, that sounds like a little bunch of mumbo jumbo at the moment, and that's okay. It is supposed to sound like mumbo jumbo. Eventually, the cobwebs will disappear. Okay? The thing for you to remember at this point is, if at the end of the accounting period, the adjusting entries need to be made. We've seen a whole bunch of that for homework. We talked about that. Okay? Part of the adjusting entry is this, the wages expense, the wages payable. That's only an adjusting entry. The reversing entry is not mandatory. Okay, you can do it if you understand it and you want to make the process, the accounting for the wages a little simpler in the new period and the next payroll is paid. But it's not mandatory. That's why we say it's optional. A lot of accountants don't do it. Some don't even remember it can be done. Reversing entry, man. I don't remember that. Last time I saw a reversing entry transaction, I was in college 30 years ago. All right. So that's the extent of the discussion at the moment. As far as the key for this chapter so far is really not the reversing entry. That's a small part of this matter. Okay. The key and the adjusting entry we already did in chapter 3. But again, they come up. The key part of this chapter so far is what? How to do closing entries. That's the key. Don't lose too many sleep on the reversing entry. Even though if you get it, that's fine. All right. And the adjusting entries, you had a whole bunch of homework and we had a little discussion. So I'm hoping that makes you a little more proficient, but that's okay if you still get stuck on a couple of things. This thing is not magic. I wish I could say it was. All right. The final part of this chapter is what we call the worksheet in accounting. The worksheet is what accountants use to summarize their work in order to make the preparation of financial statements a little more simple. Does it mean it's simple? No. But it's a very clean and neat way for accountants to work to come up with their final numbers. And we call this the worksheet. Now, the interesting thing about the worksheet is it is made up of many of the components that we've already discussed, like the trial balance, like adjusting entries, like the adjusted trial balance, and the preparation of income statement and the balance sheet, all of which we have already touched on. Isn't that interesting? And so now we take that knowledge, quote unquote, for some of us, don't worry about it, and we use it to help us prepare the accountant's worksheet. The accountant's worksheet is something else that will keep you locked in for a little while. But that's okay, because that is the whole purpose. Remember, if you don't get locked in, you're not serious. You have to be stuck for a little while. All right. See if I assign any worksheets. Yes, perfect. Now, like closing entries. By the way, can somebody remember the closing entry step without looking? No? Let's see if the brain was working at this hour the way it should work. Step one, closing entries. Close revenues too. Income summary. See that? You even look, you're like, man, this crap, you've been beating this to death. I'm sick of it. That's the whole idea, to be so sick of it, just jump on you. That's it, let's move on. Step two. Yeah, closing expenses too, income summary. Step three. Yeah, the results of income summary, net two, close it to capital. And finally, close withdrawals to capital. It's an amazing thing when you're present and focused. The brain is a funny thing. I'm telling you. And if you insult the brain by not being present and not being focused, it will insult you by not remembering. Man, you weren't there. What? Leave me alone. You were there, but you're not focused. Leave me alone. The brain is a funny thing, but if you're there and you focus, so you guys just like let it come off your lips. It's a funny thing about it.
That's at the end of the year.
Yes. Or month, whatever the closing period is. Usually the closing period is annual. But some companies, they close their books monthly for some reason. That's not the norm. Usually it's annual. Okay, for sure. You see somebody closing books monthly, you need to bring that into question with your auditors or some such person. That's not the norm. Generally accepted accounting principles, we close our books once a year. Remember, accounting doesn't like any variations. Unless you give them specific instructions on what to vary, and that's all you can vary. Other than that, stick to the rules. All right. So now we have the worksheet, which has some steps as well. 1, 2, how many? 1, 2, 3, 4, 5 steps. Now, even though that worksheet on page 144 looks like a bunch of, like a Junkanoo sheet. All the colors like a Junkanoo sheet. Really, it's not as hard as it looks. Especially if you can remember some of the stuff you already know. But that's okay, because you're going to get some more practice. And you guys have been fortunate, you've had 2 holidays in between. Man, some students would just be like, oh my God, I'm blessed beyond measure. Because what it does, or what it was intended to do, is to give you more time to play. Even though we don't always take the time to now we have other things in life to do. All right, so let's look at the worksheet. And let's take it one step at a time. Now, I could say to you, blah, blah, blah is the case. But I expect that at some point you will read every single thing on the page. You can't do everything on the page in class. That's for your reading pleasure when you get home. But the reason why we're here is to focus on what's really key. So that when you sit down to read it in detail and start doing homework and practicing it, man, this is a piece of cake. So, beginning, first of all, let's look at the worksheet. Did anybody look at it before tonight? Sarah. How many columns are in the worksheet? 5, 10, depends on how you look at it. Technically 10. What is the name of column 1? Column 1 is the trial balance. What's the name of column 2?
Adjustment.
Adjustments. Column 3?
Adjusted trial
That's
balance.
the trial balance. None of these names are strange anymore, I hope. Number 4.
Income statement,
uh,
balance sheet.
Notice the trial balance even has familiar setup. The heading begins with the name of the name of that, followed by the name of the report, followed by the period that it covers. See that? Very consistent. So now that we know that, and then of course these account names, none of them are strangers to us now, are they? Hell no. Okay? Not at all. So, having said that, now we can actually get into this worksheet with some degree of confidence. If I could use that word. Let us start the worksheet with the trial balance. Do you ever have to figure out the trial balance so far? No. Usually it's what? Given. Even if for some reason it's not given, and you are asked to prepare a trial balance, what must be given for you to prepare a trial balance? There you go, account names and balances. Because they are the balances that you need to prepare your trial balance. See that? How about that? So if you're doing a test week after next, by the way, the 31st, don't forget. So all of this week and all of next week, you have no time for any fun. I'm assuming that you've been reading and working and doing homework and all that previously, but now you're coming down to the final conflict, which is the 31st. So a good deal of your waking hours other than work should be practicing old stuff again, reviewing stuff again, getting ready to make sure you know what those basic definitions are. I'm not going to ask you anything out of this world. I'm going to ask you fundamental stuff that it's important and you should know. And you're going to get problems to do that you've seen before, because my goal is not to lead to intentional frustration. They're going to be things you would have done before. Some of the questions will look like homework questions to some extent. So if you've been doing homework and been practicing and doing a little extra on your own until it pisses you off, that's the whole idea. If you don't get fed up with it, then you probably haven't done enough. Because at the end of the day, my experience has been when you do that, the results are far better than when you don't. Okay? Even when I say from my experience, I don't mean from my many, many years of teaching the course with students, including when I was a student. It stank preparing for exams. I've written 3,235 trillion examinations somewhere in my lifetime, and I still hate them. Most students don't like examinations, but that's okay. Just give it your best shot. Stay with it, keep practicing, keep working, keep working, keep working. It's maddening. Everybody's having fun, you're tired, frustrated. That's okay. All got it? Okay. Just trying to keep you guys. So the trial balance is not a problem, or should not be a problem, which means we can go to the next stage of the worksheet, which are the adjustments. Now, these adjustments should not be strange to you either, should they? Haven't you seen these numbers before? Previously. These adjustments are adjustments we've already done. Notice when you would read how to do these adjustments, you'll see adjustments have a letter against each one. You see a little letter? Starting with A, right? Where's the first A?
But it's,
Prepaid rent. Oh, this thing, yeah, it was here. For how much? Oh, that thing. Remember that, anyone? Prepaid rent for 1,600? Okay. That's the first A. Where's the other A? For how-
An expense,
See
1,600.
that? So that's your adjusting entry that we did a million years ago already, remember? Debit, rent expense, 1,600, credit? Prepaid rent. Your
Prepaid
job
rent.
now is to see where it's positioned on the worksheet. All we're doing is taking the journal entry we already did and putting it on the worksheet as a summary. So the A for prepaid rent, what is that sitting next to? What is that lined up with in the trial balance? Prepaid rent. And what is the total of prepaid rent in the trial balance? How much? Debit or credit? Which means that when we put in the adjusting entry of 1,600 next to that as a credit, then the adjusted trial balance will be what? Does everybody see that? Oh, some students just get stuck on that, like, I don't see it. And I'm like, why not look at it again? They're like, and then eventually they see it. See that? Simple as that. So that's your first adjustment. Adjustment B, which one is that?
Office supplies,
Well, it looks familiar. What debit or credit?
credit.
And debit, so you have to go find the other part of it,
Office supplies expense.
down at the bottom, correct? And notice all the expenses are sitting at the bottom because we have to add them in after the trial balance. Do you see that? That's all. So that we can properly reflect them in the adjustments column, which we already did by journal entry. And so you label them A, B, C, D until you've done all the adjustments in the worksheet. Now, yes. T accounts, let me put it this way. The worksheet is really summarizing all the detailed work we do in T accounts. The T accounts will still be there, because remember, all the T accounts represent what? See, or what? GL. That's right. That's all T accounts are, individual general ledger accounts. We just call them T because they look like T's. But these are really all individual ledger accounts. Okay, which sits in the general ledger. That's completely different from summarizing the transactions in a worksheet. The worksheet is really just a summary of the adjusting entries, which of course are represented by what? Journal entries, which we've already done. So instead of looking at the journal entries as journal entries, we put them into the worksheet and show them as adjusting entries in the worksheet as a summary. Doesn't change all that stuff that's sitting in the general ledger, it's still sitting there. Now, we have the trial balance. We have the adjusting entries column. What's the third column? Adjusted trial balance. Folks, don't complicate it more than you need to. All you do with the adjusted trial balance is start at the top. What are any adjustments for cash? So the cash balance and the trial balance goes over to the adjusted trial balance. You see that? Sometimes these folks get stuck on that. Did we make any adjusting entries to cash? No. So there's no adjustment to make the cash. So we carry over the cash balance from the trial balance to the adjusted trial balance. Do you see that? What's the next item in the trial balance? Any adjustment? What's the adjusting entry? Debit or credit?
Debit,
For how much?
400.
So what would be the adjusted? What would be the amount in the adjusted trial balance? Well, what was the original amount in accounts receivable? In the trial balance,
4,000.
4,600? Debit or credit? Debit, and then we had an adjustment of 400, debit or credit? Debit.
Debit.
We have to add these two, correct? So
Yeah.
4,600 plus 4 equals? So the adjusted
5,000.
trial balance should be?
5,000.
Do you see that? Yeah, that's all. Piece of cake once you get it. And don't, and accountants and factors, some of them like to try and skip over the worksheet too, doing stuff like, I got this, and make mistakes. If you just start at the top and keep working your way down, you'll be fine, especially if you get your adjusting entries in the second column done well and properly labeled. Sometimes in practice, people forget to label them. They put the credit, forget to put the debit. You follow? The phone ring, Kentucky Fried show up or whatever. Somebody in a bikini, they get distracted and they put B and don't put A. They put this one and don't put inside the worksheet, and that doesn't balance. Then you have to go back and start all over again in the real world. Okay, so don't be too perturbed when you're doing homework or something doesn't work out. You just go back and see what you didn't do. Okay. What's the next entry after accounts receivable? Supplies? Any
Yeah.
adjustment? What's the balance in office supplies?
Debit of 5,200.
5,200, and the adjustment is
Credit of $1,540.
1,540. Credit. So over to the adjusted trial balance, it'll be
$3,660.
3,860.
No, 3,660.
Okay.
Yeah.
See that? So you started off with this. This is what you used. The adjustment shows what you used, and it's what you have left. That's all. That's all the adjusted trial balance is. To show what's left after you show what's used. That's the whole point. What's the next item under office supplies?
Prepaid rent.
Prepay, that thing again. How much, what was the amount in the trial balance? 34. How much of it was used up?
3,200.
3,200. How much was used up? 16. It's left.
16.
16. And you go all the way down. Let's do an expense. Go down to the bottom of the worksheet and the adjustments column. What's one of the expenses down there? Sorry? Rent expense, okay, rent expense, for how much? 16. Any adjustment? That's the adjustment. See that? This was not in the original trial balance. No. So we carry that all the way over to where? Adjust the trial balance, and the balance shown will be? See that? So what suddenly looks like a nightmare becomes something less of a nightmare. Notice your trial balance, debits and credits should balance if you have them written down correctly. The adjusting entry should balance because for every debit, there must be a credit. If your adjustment column does not balance, you did something wrong. Go back and find out why. Because it must balance. The debits and credit amount, debit and credit amounts must be the same, which means your adjustments must balance. Even if you name something incorrectly, if the amounts are the same, it's still balanced. Same thing for your adjusted trial balance. If you carry those amounts over correctly, That's where students and the practicing people get stuck, carrying over the amounts correctly. But if you do that correctly, it should balance the debits and credits, as you can see. If they don't balance, if your trial balance doesn't balance, if your adjustments don't balance, and if your adjusted trial balance does not balance, you did something wrong along the way. You just need to go back and find it. If you're tired, take a nap and then come back, just like anything else. Like the nutty professor, and check, look again. Now that I'm rested. Crystal. Man, it's easy for you to say. I know it's not. Is anybody in this class who does well at going to bed and then getting up just to stuff? Yeah,
Early
one,
in the
two.
morning, around 4 or 5 o'clock.
Yeah. You feel ready to go after you've rested.
Mhm.
Yeah. Some people, they hate that. They say, what I don't do when I'm tired, too bad. I'm not getting up until I time to go to work. Who's that? Yeah, it's like, man. They're trying to get them up after they lie down. It's hell to pay. They have to do everything, no matter what it costs them, before. Seriously. Okay, my wife is like that. What doesn't get done before, dog eat my lunch, or anybody else for that matter. That chick is what? Out cold. Seriously, so I get it. Okay. Absolutely. But whatever works for you, that's what you have to do. But I have found, yeah, when you're studying especially, and practicing and doing homework or whatever, study, especially study, practice, that kind of stuff, the fresher your brain is, the more productive you tend to be. If you're tired, you're far less productive. Now, some people are just super geniuses, no matter how tired, they just like, and go to sleep. But for most of us, the more rested our brains are, the more effective we will be in whatever we do. Study, practice, homework, whatever it is. All right. So we've looked at 3 columns. When you sit down now to do homework, it should make your life a little easier now that we've kind of dissected down. And we have dissected down in more ways than one. Definitely. It's funny. It's funny. You have to do both. Oh yeah, when I was in university and all that, same thing.
Yeah.
Decades ago, our thing was the same. Homework again. That's it for the professors don't care. And this is, but we have other classes. They don't give a damn. Other classes, it's your problem. But I work. So if you can't think it, get to vote. What is it you can't spell or whatever? Yeah, they don't care. As far as they're concerned, their course is the only one you're doing. Your job is your business. Yes, if you're tired too bad, take uppers, downers, sleepers, get up, whatever you need to do. They don't care. They don't care about your addiction as we don't either. They don't even care if you curse God and die. I know it stinks. Okay. And somebody asked me, so Mr. Wilkinson, if you could be young again, would you? I'm like, are you kidding me? Then I gotta go through all that bull crap again? No way. I'm waiting to go to glory now, so I can go and proud, whatever it is. The hell I wanna do that again for? Children again, homework, collages, school fees, hell to the no. No reason, God don't make mistakes, that's why he only gives you what? One flicking shot. Who the hell wants to be doing it again? So, once we have our trial balance and it balances, and we do our adjustments and they balance, and we carefully carry it over to the adjusted trial balance, one line at a time with your ruler, whatever works for you, see? Don't like any, many, money, books, nah. Because you're gonna do something wrong, carry something over incorrectly or whatever. Once you do those diligently, those three columns will balance eventually. Once they balance, don't try to go to column 4 unless those three balance, because you're gonna have another problem. Okay, then we can go to the income statement. Notice the income statement and the balance sheet columns are pretty scarce, aren't they? The real work is in the first three columns. Once you do them well, the last two is like, man, this is great. So what's on the debit side of the income statement? Total? 9640?
All the balances from the adjusted.
Interesting. Well, what's the first debit on the income statement side? How much? 5,000. This 5,220? Where is that?
5,520.
5,520? How did that get there? Is that the first debit in the income statement column? How did we get that? So we took 720 from what?
We added from the adjustment.
Oh, we added 720 to 4,800 because the original expense for wages was 4,800. Then we added another 720 that was for work done by Conchita, whatever her name was. Which gave us a total of? Okay, so that's the first debit. What's the second debit? How much? Utilities? Okay. Interesting. Next debit? How much? Oh, that amount that was left. I mean, sorry, that was used. Next debit? Total? Any more debits? How much? Any more? So the total debits then equal? The total debits in the debit column of the income statement.
13,600.
13,600? The total debits?
Oh, sorry.
9,000.
9,640.
Yeah, 9,640 is the total debits. Anything in the credit side of that income statement? What? How much?
13,600.
Anything else?
No.
So what's the total of the credit side of the income statement?
13,600.
Interesting. So the difference between the credit total and the debit total is how much?
3,960.
Now, we know that normally that difference, since the revenue is greater than expenses, should be on the what side? Since revenues are greater than expenses, the difference should be on what side? Credit side. But it's not. How much is the difference? So here's how the worksheet works. When you prepare the income statement, we know that the net income will be what? 3,960. But for the purposes of balancing the worksheet, what do? We take the net income and put it to the debit side so the worksheet balances. Do you see that? But we know when we prepare the income statement, what's going to happen? It's not going to be a debit balance. It's going to be a what? Net income of 3,960. Rule: we only put the net income on the debit side to balance the worksheet. Don't try to figure it out. That's the rule. You try messing with that, figuring it out, you get stuck. So now your income statement columns balance. Which leaves us now with just the balance sheet. How many balance sheet items? Well, what's the first balance sheet item we have on the debit side? Okay.
Yeah,
Followed by,
accounts receivable,
is the accounts receivable in the original trial balance the same as the accounts receivable in the balance sheet here? No, it has been adjusted by how much? How much? Way to go.
$400.
Yeah, absolutely. See, this thing is beginning to kick in. Doggone it. Even if you don't feel elated yet. But it is. That's the beauty of this thing. Any other debits in the balance sheet? Office
Office
supplies
supplies,
of how much?
3,660.
Yeah, because that has been adjusted too, hasn't it? Okay, and the balance sheet is now showing the what? Adjusted amount, the correct amount. Following the adjustment, that's all. Any other debits?
Prepaid rent,
Prepaid rent of how much?
16.
1,600, yes. Any other debits? Office equipment? How much?
16,320.
16,320, the amount we paid for the equipment, the cost. Any other debits?
Look like
Withdrawal,
capital.
how much?
Oh, I say withdrawal.
It's almost 2,800. That's showing up in the balance sheet because that's what the capital account is, isn't it? Absolutely.
No.
Debits? No. So our total debits then equal 51,860. Okay, now it gets interesting. 51,860. Now we know when we did the income statement that based on our revenues and expenses, the net income was 3,960. We only put it on the debit side to balance the income statement. That's all. The total debits in the balance sheet is 51,860. Now, what are the credits in the balance sheet? What's the first credit? Accounts payable of 300, followed by
Nah, that ain't accounts payable.
that's not accounts payable?
Look
So
like
the first credit was what?
depreciation. And
first credit?
depreciation.
Of
And
how much?
depreciation of office equipment.
Oh, the 300 that is depreciating office equipment. Okay, that's the first credit in the balance sheet.
Mm-hmm.
Interesting. Next credit in the balance sheet.
Accounts payable,
How much?
6,280.
Anybody remembers what that represents? 6,280? Probably not, but you could go back and check anytime. Just start with the trial balance and you'll see. Right on that same page, the worksheet, remember, it's right there. Go back to the original trial balance, see if there are any adjustments, and you'll see. All right, any other credits? No more?
Unearned design revenue,
Of how much?
$600.
600, yeah, that unearned portion that we looked at before. If you had any doubt, go back to the trial balance at the beginning, look at your adjustments and you'll see. Any other credits?
Capital,
Capital of how much? Notice the capital
40,000.
balance does not change, the original investment amount. Are we done with credits in the balance sheet?
Wages
Say how.
payable,
Who?
wages
Oh, wages
payable,
payable, how much is that?
720.
We're more than familiar with that. By the way, if I ask you on your midterm exam, if I say the reversing entry is mandatory, true or false, what would you say? Stop the madness.
All
She actually fell for that. I know it's getting late. She said, "No, I don't care, true." Say, "I don't care." But it's really false, correct? It's optional. No, you don't. But when it's time to pay the salaries, you have to go back and date to see which which expenses for the previous month and which expense for this current month. The reversing entry keeps you from having to do that once you do the reversing entry. Yeah, but it is optional. Right. Any more credits?
No,
No. What are the total credits?
47,900.
Now it gets interesting. 47,900. The difference between the debit and credits equal?
3,900.
That looks familiar? What is that?
Net income.
Yep. Without the 3,960, does the balance sheet balance?
No,
No. We know that the normal balance for this, because this is net income, is a credit. Where is it in your balance sheet? Yeah, but credit only for what reason? To balance the balance sheet. Okay? Because you know, once you prepare the statements, you know where they're going to go. Okay, for sure. Okay, so in the income statement, the net income is what? Debited to balance it? And in the balance sheet, it's credited to balance it, but that's all. Okay? The statement process does not change. And that is your worksheet. Does that mean that you cruise through the homework? No, you're not supposed, well, some people might cruise, depending on, because some people get through things faster than other people. But don't worry about whether you cruise or not. The only thing you need to worry about is what? Like, yeah, you get to the end. Don't be like the Titanic. Looking pretty inspiring at the beginning, go down in the middle. No, make sure you get to the end. That's what matters. All right. Look at page 146 before. This is the homework again. That's funny. On page 146, there's an exhibit called Exhibit what? Exhibit 9. What is the heading of that exhibit?
General Journal.
Now, let me just say, you probably would have seen this earlier in your reading, but the General Journal is really the other version of the General Ledger. Remember, the General Ledger houses what? The T account or ledger accounts. The General Journal then houses the journal entries. The General Ledger houses the ledger accounts. The General Journal houses the journal entries, like a book. Doesn't it look like, see, it's like a book, manually or electronically, which means that every single journal entry must be recorded in the General Journal, whether it's manual or electrical, in chronological, what order? Date order.
Date order.
Okay, folks? Period. Now, we've been doing like little itsy bitsy little journal entries like out in left field with no details for practice purposes. But in reality, this is what your general journal should look like. Whether it's manual or electronic. Notice it has a heading called General Journal. It has a date, and every date is chronological. You pick up a journal entry and you see March the 3rd, and then February the 2nd, that will not fly. Somebody does not know what they're doing, or they're trying to undo something. It must be in chronological order. And then in the middle, we have the what? Description. Do you see the description, folks? The debit, the credit, and the narrative to say what the transaction represents. Does everybody see that?
Yeah.
Okay. Because in practice, if you're preparing a journal entry on your job, it's not supposed to look like the stinky journal entries that we do on TV on the board for practice. It has to look like the way it looks in your text. Debit, credit, and a narrative to say what the journal entry represents. Purchase of land, purchase of vehicle, to pay salary from previous month, whatever it is. And then of course we have our debit and credit column for each journal entry transaction. What do you think the posting reference is? Yeah, well, it goes to show
The
you, for
account?
example, each
The
journal
account?
entry has to be posted to a ledger account. So the number in that posting reference is the what? Ledger account number. So for example, what's the first item in this journal entry? Rent
Rent
expense. What's the posting reference?
514.
514. So when you go to the GL, to 514, which account should you see?
Rent expense.
Absolutely. So if you're an auditor and you go to 514 and you see sugar baby account, man, something is wrong. Sugar baby account, what the hell? So passing some money for them. Might be some sugar for some people for real, because people have all kinds of things going on once they get familiar with systems. And when they find out that nobody's checking, see, that independent thing. Familiarity breeds. Anybody knows what the end of that is? Familiarity breeds.
Content.
Well, I like that one. The actual expression is contempt, but it also breeds corruption. But sometimes when folks get familiar with how things work, rather than remembering their moral responsibility, they start getting creative. All right, so that's your general. This is really how it actually looks in practice. It does not look like this thing that we use for discussions. All right, so in future, well, I shouldn't say I expect your generals to look like this. It's optional. How's that? If you ask to prepare, unless the question says prepare journal entries in standard journal entry form like this, you don't have to do it this way. I encourage you to do it for practice. Okay, so you get familiar with it. Even it'll take you a few seconds longer, but that's okay. Because it does take a few seconds longer to do it this way than to do the skeleton version that we use for discussions and class. All right. Okay. And so I will stop there so I can give you the most of, well, not the most important, the other important part of the session, and that is your absolutely. Because that is what's going to make you even better at this crazy stuff. No doubt, even though it doesn't seem that way at the moment. Vanya. Hi, Vanya.
Hi.
Hi. Did you send me your homework?
No, sir, I was able to scan the first two sections, but I needed to, I still have the last one to scan. I wasn't able to scan that one.
Okay, that's fine. As soon as you do, send it for me. So I can have a look at it and tick it off. Because remember, at the end of the day, you get credit for each set of homework you did. You're not only doing it for practice sake and for your own development, but you actually get some credit for it at the end of the day as well. All right, homework. Let's do that before we run out and forget. Homework for chapter 4. Are we ready? Okay. Page 154. Page 154. Question E1A. Pretty easy one. Get you warmed up. Page 154, question E1A. Also on page 154, question E2B. E2B. E2A, that's the first one.
Mr. Wilkinson,
Hi,
you said question E to B?
It's not E2B? I have E2, E1A. And then, sorry, E2A, yes.
E2A, okay.
Yes, E2A. Man, I must have written this A about 3 AM in the morning. That's my foot. That's the other problem with doing stuff late. All right, and then on page 154. Sorry, page 154, yes. Question E3A. E3A. They're the easy ones. And then finally, on page 159. Yeah. They're the easier ones. This last one is the one that's supposed to challenge you. Page 159. Question P4. Page 159, question P4, requirement 1, 2, and 3.
Looks like E2A, we doing all parts of the question.
E2A? Yes.
Okay.
Mhm. But those first 3 shouldn't stress you too much. Maybe 159 might do a little something, but don't worry about it. That's the whole idea. No pain? Absolutely, that's still true. You guys be safe and I'll see you next week. For those of you in New Providence, you can bring your homework next Monday. For those, good night. Drive carefully, don't speed. Yes, I'm like, Reno, it's a good night. For those of you online, please scan the homework and email it to me. Have a safe week. I'll see you next Monday.
Good night.
Good night, good night. Take care.
Good night.
Ladies online, take care. Good night. Hi.
I suggest to do page 78. I can email it to you tomorrow.
That's fine. Okay, that's fine. Okay.
Yeah, yeah. Trying to call my head again.
Good night. Please drive carefully. Okay. I know it's been a long day.
Yes, so. Bring it in. All right, thank you. But is there anything still? No, no, I could push. I have no problem with that. I don't know it, because I mean, I think it's a higher, like, couple of customers. I'm not sure if they have openings now, but like I said, Barbara, I think East Station Park, so I don't know if you want to come there. Yeah. East Station. Right.
Yeah, that would be the thing to
So
do.
if you want to come there, drop it off, and
Sometimes, it just depends. Yeah. So if you have somebody like her who will take it, drive there. Don't send it with anyone. You go and say, may I see her? Absolutely. There's nothing more effective than that. Okay, for sure. Hi.
So I was online last week, right? And I missed the question, page 78. So that means I'm
Tired.
homework.
Okay, Vincent, take care.
That means my homework. Is it okay if I do that next, send it to you?
You can do
The
that.
latest tomorrow?
No problem.
Okay, okay,
That's
thank
fine.
you.
What do you think is sort of fundamental? I always tell folks that